Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Kristen Sieffert, President of Finance of America, to discuss why the historical approach to retirement planning is not sufficient for most to satisfy a modern retirement. Kristen, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. I appreciate you having me here today.
You got it. The retirement crisis in the U.S. is very real. What do you believe are the factors contributing to the persistent financial challenges that Americans are facing later in life?
Yeah, there's a lot of things at work here, and I'd say a few of the main drivers include one being longevity, right? It's a blessing, but an expensive one. People are living a lot longer. What it takes financially to live comfortably during a 20 to 30-year retirement is a relatively new phenomenon, and people just aren't prepared for the many unplanned events that can happen during that long of a time frame that really further eat into savings and impact retirement plans. And then half of retirees are entering retirement with a traditional mortgage, which is very new as well, right? That just didn't happen 20 years ago. That puts a huge strain on cash flow for people. And then last, inflation has just taken a huge toll on how far dollars can last during retirement. A big one is increased housing costs, which carry substantial increases in homeowners insurance and tax payments, and then obviously rising healthcare costs as well, many of which aren't covered by Medicare. All of these things contribute to the fact that we've got a $4 trillion retirement savings gap, and the conventional playbook just isn't comprehensive enough to really bridge that gap today.
What else do you believe can be done to help address the retirement crisis?
So the one asset class that's big enough to cover this gap is the $12 trillion of home equity that's held by people 60 years and older. At our company, we like to say that the nest eggs that people need are the nest themselves. So it presents a massive opportunity, but most people just don't understand how to leverage home equity to create better financial outcomes for themselves during retirement. And we found that home equity is really best utilized if it's part of a plan that's set up earlier on in retirement rather than waiting till it's a last resort. And so it's really important that people take the time to work with people that are educated on how to leverage home equity, which is why we've partnered with people like the Stanford Center on Longevity, the Financial Planning Association, Morningstar, to name a few, because education really is key for people to understand the vast benefits of using home equity.
Reverse mortgages have had a questionable history that's since improved, but there's a lingering perception that there's issues with the product. What's changed, and why should older homeowners consider a reverse mortgage now?
Yeah, so I've been in this industry for about 20 years now, and so much has changed. When I got into the industry, 2 decades ago, the product did have so many challenges. And the biggest one was that it just wasn't really built with sustainability in mind. And oftentimes people that would get the product were doing so as a loan of last resort. So it really was delaying the inevitable. And it put people, while it might have helped them in the short term, it just didn't give them like the long-term sustainable solutions that they actually needed. Thanks to various government and regulatory changes, the product has been drastically improved, and people now use it really as a tool to supplement existing strategies so that they can have a more holistic outcome, and they're able to weather events that are unplanned for, unprepared for over that long length of a retirement. And while conventional wisdom really discouraged accessing home equity during retirement, 84% of seniors hold over half of their wealth in their home's equity. So that's the largest asset for most Americans. And while things like downsizing used to be one of the main options retirees could leverage to, tap into that home equity, when you look at the current landscape, home prices are at an all-time high still. Interest rates are higher than we've seen in a really long time. You've got costs of selling a home, costs of moving. Leveraging equity to age in place oftentimes can be a much more prudent option and a lot better financially for those who look into it as well.
I know Finance of America is focused on the home as the center of a retirement. How else, aside from tapping into home equity, can older homeowners utilize their home?
So an interesting one for us is home sharing. So think of it kind of as the modern day Golden Girls. There's a company, Silvernest, which is part of our family of companies. And we connect older homeowners with renters who serve as housemates. And it provides extra income, companionship, and peace of mind for people that would otherwise be living alone. It has a ton of positive implications because it solves a few other problems our country faces. One is affordability. So it creates access to unused space in people's homes, and that can help with that affordability problem. Cash flow for the homeowner with the extra income coming in. And then it also helps solve for the loneliness and isolation issues, which actually can have devastating health effects on people that are aging alone. So looking ahead, we've got reverse mortgage options, we've got second lien home equity options, we have kind of hybrid forward and reverse mortgage options, and then we have home sharing. We really want to figure out, how do we look at the home at the center of a modern retirement and figure out what other gaps can we create by leveraging that home so that people have more options to live the retirement that they want.
So is the retirement crisis solvable?
Yes, so we think absolutely, but we also think that people need to be a lot more willing and open to considering novel approaches to funding their retirement. We are facing a much different retirement landscape than generations of the past. And we think traditional methods, when you look at all of the data, just aren't really sufficient to meet the needs of today's modern retiree. And, long-term financial security is an underappreciated problem in our country that really doesn't seem to get enough attention. Again, the data out there, when you start to dig in, can be quite scary. But when you look at the amount of equity people do have in their homes, there is a very good and clear solution. And it really depends on all of us to start educating one another on how to best tap and utilize that equity so that people can, create the things that they want for themselves in this kind of last act of life, which is much longer than it ever used to be.
All right, Kristen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.